Hello, I'm Vadani Ariyam. In this presentation, I'm going to show you how to charities fund accounting for reports. Charities fund accounting for reports. This is my brand new course, How to Set Up a Charity. Charities Selection 9, Charities fund accounting for reports. The main difference in the way of maintaining accounts in business and charity is accounting for funding. Fund accounting for charities split the income and expenditure charges into several categories according to the purpose of funding received from the funders. Let me look at the different types of funding that a charity receives when running it. Unrestricted funding, this money can be used for general purposes in running the charity, like admin, support costs, and things like that. There is no restrictions. There's another one, restricted funding. This funding is given only for the purpose that they have agreed. Some donors pay for some activities which is run by the charity. So the money should be spent on that activities only. That is restricted funding. Designated funds. Some charities seek this type of funding for some unexpected repairs, say some building repairs or something like that, something happened, and when they receive it, that funding goes only for that. Endowment funding. It represents the capital funding that charities receive from the donors, so the trustees take responsibility to invest or spend on the charitable purpose. When the charity is accounting done during the year or ongoing, the splits, the allocations should be made in order to make things easier to submit the reports at the end of the year or when required by the donor. It represents when the charity's accounting staff doing the accounts, they have to allocate the income and the expenditure accordingly to the type of funding they receive. Then it becomes possible to find the balance of the funds. Yes, when they do, say, supposing you received a restricted funding, the accounting staff has allocated the expenses incurred for that particular funding, then you will know what sort of balance is there. Or is there a balance or it has gone a negative balance. Then it's possible to find the balance of the funds in the right point at any point of time. So, for example, in April you received the funding for that particular activity. The activity has started in May, so that means end of May the activity has finished. That means during that period, quickly do the accounts as well. That means allocate that income. You don't need to allocate the income, only one income for that particular activity, and allocate the expenses for that activity. And when you prepare, if they ask you for the finance report, you can submit immediately because you know where there will be a balance or not. Or have you used the income completely? It needs regular doing in the event. Sometimes, this is for a month I have spoken, sometimes the restricted funding goes on for a year. For one full financial year they give, so the activities go on. The particular activities for that funding will go on for the whole year. So you have to do ongoing accounting allocations. Otherwise you will know where you are, whether you have spent the money or whether you have not spent the money in full. Therefore, the urgency to maintain the funding accounts is unavoidable because you don't want that money to be spent on other things. It's dangerous because they have asked you to spend the money on that particular activity only. The reason for you to account for restricted fundings carefully if you mistake allocating the expenditure for a restricted funding, the accounts at the end of the year will show a surplus in the restricted funding, limited funds, but which is not true. You might have to top it up. You might take the money from the as reserves or something like that from the unrestricted funding to top it up. Therefore, what will happen if you will end up spending the money you don't have. That's the thing. Because you have not allocated the money to the restricted funding, therefore it's showing the surplus, which is not right, but you have spent all the money actually because the allocation has not been done by the accounting staff. Therefore, it is showing a surplus, and you do not then, you have to find ways to top it up because you have to prepare the reports for them, for the funder. Then you face a severe cash flow problem in the end. That might put pressure on you to raise additional funding. That will make you aware that your reserves policy has some issues as well. It indicates that most of your funding is restricted. Therefore, you need to look for other funding as well in the event you have problems like this. Do not ever use restricted funding, financing for any other than its purpose, even if you intend to pay back. Because in the meantime, if they come for inspection or something like that, you will be in big trouble. And the charities, any charity is expected to have a reserves policy. Reserves, what is a reserves policy? Every charity needs to have a reserve policy and establish a level of appropriate accounts of funds kept in reserves for the charity to use in the event of losing some of the funding. If a charity is having reserves, you never know when you will lose the funding or when it will go on forever. You never know that. You are not sure of the funding. That is the weakness of the charities because they merely depend on donors. You don't know when a donor will leave you. Maybe the reasons for leaving you, maybe they see some irregularities in running the charities, or they change their policy. So if they lose, if they have reserves, you can top it up immediately in the long run. Immediately the short-term run. You cannot top it up and continue the activities, but in the meantime, you have to look for other funding as well from other sources. The restricted fund does not contribute to reserves policy. You cannot have reserves from the restricted funding. If there is an excess funding, excess money from the restricted funds, maybe you have to increase the activity for which it was given to you, or you have to pay it back. That's how it works. Restricted fund does not contribute to reserve policy, but it will have an impact on the reserves policy because when the funders see there's a reserves policy, it influences them to come out and help the particular charity because they think the accounting is done properly, the charity is running properly, that is the reason they have a reserves as well. They think like that and they are all out to help you. So, do you like these tips in this charity funding and accounting? If you like it, please stay for the rest of the lectures as well. Thank you very much for watching this presentation, listening to this presentation. I'll make this into a video and you can watch the video as well. I hope you like it and stay for the future lectures as well. Thank you very much. Bye for now. See you in the lectures.